What's up, everyone? It's Brand the Mortgage Man, and I've helped over 10,000 home buyers over my 22-year career, and I'm here to help you. What home buyer does not want to save money when they're purchasing a home? I imagine everybody wants to save money. Some want to save money on a monthly basis, some want to save money up front, and others want to save money over the entire time that they're living in their property. In this video, I'm going to show you how paying your mortgage payment twice per month instead of once per month could save you hundreds of thousands of dollars over the term of your 30-year mortgage. So let's get right into it. So what I'm referencing are biweekly mortgage payments, and you may have heard that term. Most mortgage payments are paid once per month, right? Just normal, make your monthly payment. But by splitting your mortgage payment in half and paying half of that payment every 2 weeks, you're actually making one additional payment every year. And by doing that, you're actually cutting years off of your mortgage. And by cutting years off of your mortgage, you're cutting thousands of dollars in interest off of the amount you'll pay over your 30 years. And let me show you how this works. So what we're going to do for our example is we're going to use a $400,000 mortgage. We have $400,000 that you owe on the property. And we're going to say this $400,000 being paid over 30 years. And we're going to do that at an interest rate pretty much where the market is now of 7%, right? 30-year fixed rate mortgage at 7%. So I'm going to use my mortgage calculator here just to give you the accurate information when it comes to the monthly payment. So what we're going to focus on here is your principal and interest payment. So your principal and interest payment would be $2,661.21. This is if you made a monthly payment on this mortgage. Now we're talking about making biweekly payments. So to figure out what your biweekly payment would be, well, it's pretty simple. We take your monthly payment and we divide that by 2. So what that does is it leaves us a payment biweekly of $1,330.60, right? That's your biweekly. So every 2 weeks, right? So I said that's going to allow you to make a full extra payment every single year, cutting years of interest off of your mortgage. So let's see exactly what that does for you in regard to savings. So first, we're going to look at what you'd actually pay over 30 years on your $400,000 mortgage. So on a $400,000 mortgage, you're going to be paying that, you're going to be paying this is crazy, $958,035.59. This is what you pay over 30 years when you borrow $400,000 at 7% interest. Now we're going to compare that to what you would actually save and what you would pay over 30 years if you were to do bi-weekly payments. However, you're actually not going to be paying over 30 years because by making those bi-weekly payments, you're going to cut almost 7 years off of your 30-year fixed rate mortgage. So we said this is 30 years, but if you pay bi-weekly, you're actually going to be paying the loan off in 23 years, 11 months. So roughly 24 years, right? You're cutting almost 7 years, or they call it just over 6 years off of the mortgage. But by doing that, you're reducing this $958,000 down to $823,819.98. Right? So what's that savings? You're saving what? $130,000 over the term of the loan. So like I said, some people want to save money up front, right, on their closing costs. Some people want to save money on their monthly payments, right? But they want to do some sort of buy down or what can ever reduce their monthly payments. Others are planning to keep their loan long term. Their plan is to pay the property off. And in those situations, making biweekly payments is going to be a way to save yourself money if you're not in a position to take a shorter mortgage. Not everyone's in a position to be able to take a 15-year or a 20-year mortgage. What's nice about making biweekly payments is you're technically still making the same payment. However, it adds up to one extra payment because if you're paying biweekly, that means you have 26 payments you're going to make. If it was paid twice a month, which is a little bit different, or we're paying every 2 weeks, by paying every 2 months, it's only 24 payments. You wouldn't be making any extra payments. So biweekly is key. Now, it's going to require you to most likely make one extra payment up front to get the process started. I recommend doing that when you close on a home because when you close on a property, if you watch my other videos, I've explained this, If you closed in February, you wouldn't have a mortgage payment until April, so you skip over March. So what I recommend if you plan to do biweekly payments is take that payment you're skipping, apply it towards your new mortgage, and that will jumpstart the biweekly payment cycle. So if you're looking for ways to save money over the term of your loan but want a payment that's still affordable for you, make sure you check out biweekly payments as that option. And make sure to follow me, Brand the Mortgage Man, for more videos just like this one. You can comment below and I'll answer your specific scenario questions in this video.